Hi Deepak, welcome to SpeakEasy with Dheeraj Sinha. Great to have you on the show.
Thank you, Dheeraj. Good to be on the show as well.
Amazing. So Deepak, I wanted to start right from the beginning, right? As usual. So take us through the story of how did Flexi Loans start, right? Did you was this the first Eureka that you zeroed down on? Was there a series of flip flops which led to here? But what was the inspiration behind it? How did it start? How did it all begin?
Thank you, Dheeraj. So, see, the journey behind FlexiLoans honestly started long back.
Hmm.
Now, this was definitely not the first idea, which I zeroed upon, or not the first set of co-founders I zeroed upon. So both of them were not the first ones. Yeah. I come from a family of entrepreneurs. So I'm born to a jeweler and a money lender. So obviously I've seen loans and lending up close as I grew up. I may have done my first loan maybe when I was in class seven. so uh,
Amazing. Yeah.
so but never did I know that I will go out and start something in lending.
Yeah.
Yeah. So I went to ISB class of 8 9, and that's where I met my other co-founders. But we didn't start out of the school. So post school, I wanted to join investment banking, and it was the Lehman year. So that was the first test of do I have an entrepreneurial spirit in myself. I was in chairman's office before ISB, so I was in a job which most MBAs go post the like most MBAs go post their MBA to that role. I was in a job like that before my MBA. I was getting a lot of offers from chairman's office or corporate strategy roles. Somehow I didn't want to take that because I knew that I wanted to do investment banking in life, meet a lot of entrepreneurs, take their stories to investors, and do deal making, etc., etc. That was something which I was enamored with. Somehow managed to get ENAM, which eventually became Access Capital. Did that for a decade, and it was an amazing ride. That ride was the start of inspiration to do something corporate and institutional. Because I came from a family of entrepreneurs, but these were like small retail showrooms, right? It was not an institutional way of entrepreneurship. That journey at Enam, added that flavor for me that okay, entrepreneurship if done right is extremely scalable. It's extremely big, and you can create a massive impact. Uh, Now, as towards my early 30s is when that midlife thing started happening. I was like, okay, now it's time to start exploring something of my own. That's where started meeting a lot of common friends, common people, and ISB network was up amongst the best, for me. So those friends which we made on campus for a year were among the people which I would go out, meet, and share a lot of things. And that's why the eventual co-founder team became or came from that network. Yeah, these are the people which you will socially hang out for, where you will generally go and seek advice or guidance on, or be their sounding board many times, and so on and so forth, right? That's when you say that okay, yaar, chal kuch saath mein karte hain. Let's do something together, and it worked out well. We zeroed down upon then this idea of flexi loans depending on our strengths, because me, Ritesh, Manish, all of us came from financial services. All of us are channel accountants as well, beyond ISB. So it had to be something in financial services. I'll someday tell you about the other idea which I had, where we went to one of the VC friends of ours, and he's like, guys, it does not match at all with your skill set.
Yeah.
And you can do so much in technology with finance. So
Yeah.
that's where the maneuver towards financial ideas came in.
Yeah.
Within this, then MSME lending, and then again, this is where my childhood background, which I gave, came a lot of very very handy. That I knew a lot of entrepreneurs for their working capital
Yeah.
don't borrow from formal financial institutions, even though they are extremely lendable. You know, people like you and me who draw paychecks are easily identifiable by banks and lendable by banks, but small entrepreneurs, because of their mix of cash and non-cash income, um, it's very difficult to identify and lend money to them. And the paperwork which banks and larger NBFCs require, it's extremely difficult for them to borrow from these institutions. So I knew the gap existed. The gap was huge. We did again because we were trained MBAs beyond our DNA of entrepreneurship. We went and did a lot of primary reiki of the market and came out with that this is a massive market. So started back in 2016. Back then, not many were thinking
Hmm.
digital lending.
Yeah.
It was not a buzzword as it is today. Nobody was talking about fintech the way people talk about it today.
Hmm. 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 And what in that sense, therefore, Deepak, I mean, how do you define the problem that you're solving for in India? I mean, um, as a working definition, what do you guys work with?
Yeah. So we are a embedded finance platform for working capital solutions,
Hmm.
for MSMEs. So micro MSMEs or entrepreneurs, when they need working capital solutions, that's the area we are solving for. We are not solving for project finance. We are not solving for housing finance. We are not solving for capex finance, etc., etc. So what we want to address was the short term needs and especially the smaller ticket size checks. Now, for these checks, most of these entrepreneurs, because one, the tax they require or expect is not more than 15 days, so within a fortnight, they want that money. It's not because of lack of financial planning. It's sometimes, the requirements are much more than what they expect at the start of the season. Yeah. So they when they need funds, they need it in a faster turnaround time. Second, as I said, the product which was offered by banks and NBFCs was catered to the MSME part of it and not the micro MSME or the M part of the SME.
Hmm.
The larger SMEs was catered to. People with turnovers of upwards of 50 crores and above. We realized that there was this massive gap for entrepreneurs where turnovers ranges anywhere between 1 lakh a month to
Hmm.
20 lakhs a month, and that's where we came in. That okay, we'll cater a program for them where the paperwork required is very simplistic for these entrepreneurs to
Hmm.
understand because they don't have an army of accountants, right, helping them with
Yeah.
the paperwork. And thus, because the paperwork with the erstwhile product was so tough and bad that they would end up going to friends and families or informal market or local
Yeah.
money lenders like my father and borrow from them. So we said we'll solve this problem and in the process disrupt what my father was doing.
Interesting. And tell me, Deepak, I mean, since you pretty much started from a clean slate, right? I mean, bulk of the fintech conversation is in the B2C space, right? I mean, almost every fintech conversation is about disrupting the consumer space, right? And you chose a B2B space, and I know I have a couple of friends who feel that B2C is very high burn, right? Because they want to create a brand and a whole infra there, and B2B is easier in that sense, at least from a burn perspective. Was that the consideration, or what went behind saying start a B2B and not a B2C space?
Yeah. So again, coming from financial services background and having helped a lot of entrepreneurs raise funds, I would have closed not less than 40 IPOs, QIPs, private equity transactions in those 8 years at at Access Capital. So having raised so much funds, I knew that the biggest challenge when you're sub 2,000 crores of asset under management,
Hmm.
or money being deployed by your platform, the biggest challenge is the cost of funds.
Hmm.
And if you're borrowing at say 12 to
Yeah.
15%,
Yeah.
you cannot lend at 18 to 20%. That's where the cream of the consumer market exists.
Hmm. Hmm.
Yeah. And if you're lending upwards of 23, 24%, and for personal consumption, it's a bad idea.
Yeah.
It's not a good loan. So can you then figure out a segment where you can lend at 24 and above and still make money?
Interesting.
Uh,
Yeah.
SME financing was a great option there because most of these SMEs are making more than what you're charging them. So
Yeah.
they use our platform as an arbitrage funding also because if they're making 3% a month, they don't mind paying 2% a month and
Yeah.
so on and so forth, right?
Sure. Sure.
And that's a very important thesis which is built into our underwriting models as well. If the margins are lower than what interest will be charging for that working capital, we never lend to that segment.
Interesting. And I mean, the fact that the growth engine in India is coming from tier two, tier three, right? I mean, that's the story is being talked about everywhere, Deepak. So, what's the story in your case? I mean, do you see a fair spread nationally? Are you seeing an overwhelming over indexation towards tier two, tier three? Are you actively encouraging that? Where are you on that spectrum?
Yeah. So again, a very good question, Dheeraj. And this is the DNA of FlexiLoans. This is the biggest moat what we are trying to solve and the way we are trying to solve. From the beginning, we were very clear that no matter where the customer is sitting, be at the tip of the north or tip of the south of India or east or west, we should be able to solve the working capital financing solutions for all of these entrepreneurs. It should be as easy as ordering a pizza on your app. You know, can you do that through some mechanism? And that's what we started building upon over the years. Obviously, however, in lending, unlike selling soaps or selling pizzas, you need to recover your money back. Yeah. Or you help your lenders on your platform recover those money back. So thus, you need to have a collection footprint in all of these cities. When I say collection footprint, to eventually reach out to these entrepreneurs if they are not paying you on time.
So, you mean a
Max.
physical collection footprint
Yeah, either of your own or
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 sourced?
through any or
Yeah.
network. So we from the very beginning started working on this distribution capability
Hmm.
of collection network, and we've invested a lot in this. Most entrepreneurs ignore these 2 points, both the collection point which I spoke about now and the liability side which I spoke about. Everybody's just focusing on the product and how do you distribute. This is lending. Your unit economics will be defined by what rate you're borrowing, and your NPAs will be defined by how you're collecting.
Yeah.
At FlexiLoans, we gave very, very high importance to both of these points from the very, very beginning. And that's the reason why we are able to cover almost 20,000 PIN codes across the country
Wow.
today. You would have seen announcement by Meta recently where they said that
Yes.
they are going live pan India for micro MSME lending, etc., etc. That's powered by FlexiLoans. So we have gone live with them, and it's mentioned in the papers, and that's why I'm publicly announcing this. That we are the one of those lenders who has this wide coverage, and thus most ecosystems prefer us to go live. And we are the largest ecosystem embedded financier in the country today. So we cater to a lot bigger market, and thus our presence in tier two, tier three towns is pretty high. So now stretching your question on tier two, tier three, it's very very important fabric. That's where the real GDP of the country is coming from. And if you hear, our dynamic prime minister to everybody in Ministry of Finance and others, the MSMEs, especially in tier two, tier three, is a massive focus for the current government, and we are trying our best to serve this unserved or underserved market by giving seamless lending solutions in tier two, tier three towns. Almost 55% of our loans today are in tier two, tier three towns.
Wow.
In fact, almost 56% of the borrowers, we are the first business loan lender to them. Now, that's a metric which is unmatchable by most fintechs. They may have a credit card, they may have a home loan, but they never got a business loan, and we're the first ones to lend them a business loan and bring them into the formal economy, from the informal market, from the clutch of local money lenders or chit funds, etc., etc. That's what we're solving.
Yeah, very interesting. And Deepak, if we may go a little deeper into this, what kind of use cases are you experiencing? I mean, typically, what are these borrowings for? Are these to meet excess demand during season? I mean, what is the pattern that you're seeing there, if at all?
Yeah. So there are two or three types of pattern. I would first start with the what you spoke about. So a Diwali is coming, or a big billion day is coming, or Amazon Prime Day sale is coming, which are our prime partners for us as well. We are the largest lending partners for many of these e-commerce platforms for last 5+ years now. So they are experiencing a offline or an online season, and and these entrepreneurs want a quick working capital loan to help them. Now, working capital solution can be as low as that. They just want for one inventory turn, or they're expecting money to do 6 or 7 inventory turns. Yeah. So we have two products for that. We have a BNPL, which is a bullet loan where the entrepreneurs can borrow and pay us in 25 days. And the second product, again, we've been not having this product since 2016-17. The second product is this EMI based loans. Again, depending on the needs of these entrepreneurs, they can borrow either for 3, 6, 9, 12 months, depending on the number of turns they want to do. The second requirement is, when they want to plan for, say, next 2 years of sales, and they want to expand slightly more than what their current business is. Many of the times they are not able to get that support from local banks and NBFCs,
Hmm.
their branches, etc. So that's where again we come in and we provide them a slightly longer EMI based loan, which is ranging anywhere between 2 to 3 years. Again, they can cater to this EMI depending on their monthly sales capabilities, and we'll look at their bank statements and flows, and depending on that flow, we'll give them solutions. And the third need which we see is he's running two shops. He want to open one more,
Hmm.
and he has the capex for that, but he wants working capital for an entirely new shop which is coming in. Yeah, and so on and so forth. So that's the third use case which we see. Uh, uh, Again, we've had customers taken already like 10 or 15 loans from us. The shorter cycle ones, the longer cycle ones also. We've had like customers who've taken more than 4 to 5 loans, more than a year in term till date. So somebody whom we gave the first loan back in 2016, has become pretty big seller on these platforms, and the first loan was less than 50,000. Today, they have capability to borrow more than 20 lakhs, 25 lakhs. So that's the amount of real impact, you can see from your own eyes. Um, One of these female entrepreneur we and this is something I'm very very proud of, because stories like this get you
Yeah.
going as an entrepreneur. You know yourself how difficult or how lonely it is at the top,
Yeah.
when you're building something which has not been done
Yeah.
before. So so stories like this get you going. So there's this women entrepreneur, where she wanted a loan of 30,000 rupees, and she had a job experience before and was just started this entrepreneurship, and she was not getting a loan without her father coming as a guarantor, and she was very, like, she didn't want to bring her father on that
Yeah.
loan. We supported her, and became part of her growth journey. Today she's become a massive influencer for one of the top platforms for Amazon, and she does so much, so high sales, so and etc etc. So she has a team of more than 20 people employed with her, and so on and so forth.
Amazing.
So stories like this, just keep you going, and we've seen this real impact on SMEs in extremely smaller towns like Jalore in Rajasthan, or like you go to Vijay, like Salem in Tamil Nadu, and so on and so forth.
Yeah.
You'll see a massive impact.
Yeah. And Deepa, I want to ask you the role of technology, and two questions there, right? Really, yeah. One is obviously, what role does technology play in this? Because you do have a some kind of a physical retrieval system, right? You might as well add a physical dispersal system. So what delta is technology really providing, right? Are you beyond the platform of disbursement? How are you using technology? Are you using ML? AI is fashionable. I don't know if that's coming into play. So what's that trajectory? And second is, like it is happening in a lot of D2C, right? Where say a lot of brands such as a Mamath are now realizing that having built the brand online, the real business is actually offline, especially post pandemic when everybody's going out, and cost of acquisition digital is going high, and so on and so forth. So all the so-called digital first brands are now also becoming offline first.
Yeah,
So
digital.
two questions.
Yeah.
One is, how are you using technology? What role, what delta, what is the future of technology in your business? And second is, offline, would it happen soon?
So let me first go into the technology part, and let me answer that piece first. So Dheeraj, without technology, this cannot be done. What we are trying to do or what we are achieving to do. Well, it's absolutely impossible to reach these 19,000 pin codes in the branch model. The unit economics will never scale up. Never be able to match if you were to do it physical. I'm not talking about the volume of loans. Volume of loans can be done by opening 20
Yeah.
branches or 30 branches also.
Yeah.
I'm not right
But the
now talking.
margins, yeah.
But if you want to really, yeah, if you want to really cater to the customers across India, see, understand consumption patterns, for financial products like ourselves. from early on in our journey, this can only be done through technology. It can only be done through digital marketing, etc., etc. The second very important use case is the turnaround time. At the beginning, I spoke about the turnaround time, right? These customers want a loan um, in 3 to 7 days. Most of the time, max is a fortnight for them. So how do you give this kind of experience, to these customers when you really don't even understand that geography well, or that segment well, in our initial days. So how are you able to, fit your rule engines to, not give loans to, or keep rejecting the customers you don't want to do, and keep choosing the right set of customers? That's where a role of AI and machine learning comes a lot. But this happens only once you have enough and more data
Yeah.
about these customers to able to cater, say that, okay, this is the customer segment I want to go after, this is the cohort which I don't want to go after, and so on and so forth. The second piece, where AI and ML, or machine learning, we deployed a lot, was on digital marketing. So when we started doing digital marketing in across this 19-20,000 pin codes, or almost 2,000 odd cities, we said that, okay, this is the type of customer we want to acquire, and that's what we wrote in our algorithms when the marketing spends were happening. So that's where a lot of machine learning came in very, very handy for us, because it will just train our models and target customers which are very, very relevant for us, or our kind of lending, versus sending us junk leads, which eventually will lead to very low number of conversions. Uh, then the whole automation piece, which is a must for any fintech, where you reduce the amount of time every
Yeah.
customer spends on every screen. You reduce the requirements which you are asking from the customers, and try and take it through various integrations, API integrations with NSDL kind of platforms, and so on and so forth. So account aggregator, for example, now is a game changer. It's an amazing initiative. It's one of the top initiatives, according to me, where you'll be able to access the account statements at a few clicks.
Yeah.
And once you're able to do that as a lender, you can give the real eligibility to this customer, versus giving a artificially low entry point to that segment, and so on and so forth. Uh, However, as you rightly pointed out, there is merit to the branch model, right? But you cannot open branch in 2,000 cities to begin with. So that's where it will have to be a very, very phygital approach. As and when we go to branch model, if we open our branches, it'll be fed by a lot of data. It'll be in areas where we saw a lot of good customers applying to us through digital
Mm.
marketing, and then try and improve the conversions through these branches. Because if we get 100 customers, eventually we are able to give loans to only X number of customers, and that percentage is pretty low, and we can improve that number of customers. So that's where branches will help. But how to open those branches will not be basis gut, or basis data which is more primary research, or secondary research from other sources. This will be real data from our own applications collected in next couple of years, and of say 7-8 years of our operations. And that's when we'll start opening branches one by one in areas where we really want to enhance the conversions. And and in areas where you see a very large good cohort coming to you, and your ability to solve real problems for that. So yes,
Yeah.
branch models are relevant, but it has to be digitally backed versus uh, acquisition channels.
Sure, sure. And I wanted to pick you up a bit more on the digital marketing piece, Deepak. I mean, what's your experience been with that? Because a lot of people we know have realized that while digital was very easy and highly efficient, especially during the two years of pandemic, but the ROAS on digital has gone up dramatically, especially for D2C brands, because everybody is bidding for the same customer, same keywords,
Yeah.
right? In fact, there's a joke that some of the algorithms are being written to siphon the VC fund away to the big platforms. So what's your experience been on this?
Yeah. So again, we started with a very frugal mindset in digital marketing. We were very clear that. So I'll tell you. Let me start with a reverse side of this, and like take you through the business model in a better way. We are India's largest ecosystem embedded financier.
Mm.
It's a cool jargon today. Ecosystem embedded financing. We used to call it B2B2B. So back in 2016. So pretty much almost all large e-commerce ecosystem, all large payments ecosystem, all large food tech, payments tech, farm tech. Uh, when they were starting or thinking of enabling lending for the SMEs on their platforms, FlexiLoans came in and started those programs for them and scaled that pretty well.
Mm.
Um, More than 50 to 60 or almost 60-65% of our business come from that vertical even
Yeah,
today. Yeah.
sure.
So ecosystem embedded financing is pretty big, and pretty much now every large ecosystem who wants to do lending prefers FlexiLoans as their first financier.
Mm.
We'll always be number one on match number two,
Yeah,
but we'll always be there, eh, like enabling MSMEs on that platform. So what that did was it gave us access to a lot of relevant SMEs for literally no cost. The cost of acquisition for us was pretty low.
yeah,
However, our growth was dependent on the plans of those platforms versus we deciding the fate of our growth and so on and so forth. So as we created the cohorts of customers we like a lot, we started doing digital marketing to acquire those customers, through digital marketing, and thus we never like sprayed and prayed. So we never went into that
yeah.
keywords kind of that. Let's go after the entire customer segment. We
Mm.
were very focused in that, and the real use case for data science for us was in digital marketing. Because for underwriting, the use case started only post 2019-20. Because that's when we had enough data to use machine learning in our underwriting models. Till then it was more rule based underwriting. So uh, a lot of data science backed digital marketing can be very frugal
Yeah.
and can generate very good ROIs. Our fresh CACs are sub 5%, which is phenomenal if you compare it with industry
Mm.
benchmarks. And the repeat ratio now is almost 30 to 35% of our customers
Wow.
are repeat for us. So what is that doing is, you don't have to pay any CAC on your top up repeat
Yeah,
customers, right?
yeah.
So this is bringing our overall CACs much lower. In fact, it's lower than if you were to open a branch model and do DSA led underwriting.
Yeah.
Your our digital marketing CACs are today below that. Um, can we scale exponentially at such low CACs? I don't know.
Mm.
It's yet to be proven because currently we are growing at X rate, and I think we are growing at a very comfortable pace for us to not go out and do a lot of digital marketing. Because
Mm.
as a lender, I believe that we should not be growing more than 3 to 4x per annum, and we are
Mm.
already maintaining that growth rate.
Like every other category, right? I mean, fintech is getting crowded as well, right? I'm sure B2B lending will also have players and so on and so forth. How are you seeing differentiation? How are you seeing the need to stand apart, or are you saying that the need you're solving is so unique that just being relevant is good enough at this point in time? You don't need to look at competition at all.
The first part is right to some extent that the demand is so massive right now that it requires at least tens of flexi loans to service this demand pretty much up there. However, if you have to be the top player in the game, right? What do you do that? And that's our philosophy. We don't enter a market segment where we cannot be the amongst the top two or top three players in that segment. So the only way we are able to do that is three aspects. The way you acquire these customers, are you the best networked in that? Can you, like, if you're acquiring through ecosystems, is your logo visible in all the top ecosystems in the country?
Mm.
And we manage that pretty well, through our network, through our relationships, etc., etc. Second is how you're assessing and servicing these customers. What is the kind of turnaround times you're promising versus you're delivering, and what are the journeys you have invested in? Is it fully automated? Not. Are you ahead of the curve there always? So that's a very relevant point. And third is how you're managing the liability side so that you don't lose out on a segment. So So as a platform, we don't do everything on our balance sheet because we are a fintech platform and not a fintech NBFC,
Hmm.
right? Some percentage of the loans are on our own balance sheet, and say more than 50% are off balance sheet with various co-lenders or multiple lenders, financing these SMEs through our platform. So the moat is, the moment you integrate with our platform, you get access to tens and hundreds of such NBFCs and banks.
Hmm.
That's the mode for these ecosystems. And for banks, the moment they integrate with us, they get access to hundreds of these ecosystems. So it's a very big network effect now coming in for us, and it's
Hmm.
working pretty well for us. And I would say, as we keep scaling, that mode will continue
Yeah.
for us as
Yeah.
well. So we focus on all three areas to ensure that we have a moat here.
So I want to discuss the idea of speed with you, right? I mean, and that's been fascinating with me with respect to the new age economy, right? I mean, you look at all the classical brands, especially in fintech, right? I mean, all the bank brands have been built over decades, right? Even the lending brand, the consumer lending brands, Bajaj Finance, etc., have been built over a long period of time, right? But platforms like yourself, I mean, they're scaling so fast, right? I mean, how do you manage to build, say, trust in a category such as this, right? And any learnings on what is helping you speed scale the business would be interesting to hear from you.
Yes. So two, three things, right? One is, see, getting customers for lending is pretty easy.
Hmm.
So anybody comes and says that, yeah, I'm getting too many customers to apply for a loan. I think so that's easy. You go and stand with a few hundreds of crores at at one of the busiest stations of Mumbai, and you can end your purse by end of day. That's pretty easy. What I would say that what technology has done for us is allowed to choose or pick up those right set of customers, to whom you want to lend to versus just getting a lot of traffic on your website. Obviously, the what's happened in last few years with Geo, especially making internet accessible in almost nook and corner of the country.
Hmm.
Now, every small entrepreneur, he may not have a GST account, but he will have a Facebook and a WhatsApp account.
Yeah.
So that's a big difference.
Yeah.
You will find many of the small entrepreneurs, not they were not doing QR before COVID happened. The presence of QR was less, but the penetration of social apps was very very high, and thus those apps as acquisition method existed very very big way. You know, then came this whole theme of social influencers or social commerce, and again, it's picking pretty well, and it allows you to cater to a segment through a influencer in that network. This influencers are nothing but in every society we always had few people who will have a very high followership in that
Yeah.
market. So if you go to a jewelry market of say Zaveri Bazaar or electronics market uh, in the midtown Tazay के पास में जो है or or any of these areas, you'll always see that there'll be few guys who are top influencers in that market.
Yeah.
That's now shifting to socially, and obviously it's allowing a person sitting in electronics market of Mumbai influencing all electronics guy pan India because he'll be the first ones to announce that this is the trend which consumers will
Hmm.
follow, and so on and so forth. So it's smartly, how do you use the social commerce to reach
Hmm.
out to the right audience you want to reach out to?
Hmm.
Yeah. I cannot be going to a fashion blogger or a travel blogger
Yeah.
and paying in dollars to do marketing for us, right? Because that's not the customers we want to
Yeah.
acquire. Yeah, and so on and so forth. So so technology is playing a very very high role in areas like this
Hmm.
to improve the speed at which you can acquire customers.
Yeah.
Now you are seeing that what Nika has created, right, in
Yeah.
beauty, it's phenomenal.
Yeah.
The way Falguni ma'am and her team introduced the whole concept of education to beauty, and then use social influencers to come bring the right set of customers to that website,
Hmm.
right? across the country. It's phenomenal. That's what we are trying to do with finance as well.
Amazing.
Um,
Yeah.
I believe that uh, getting the right customers is more important than just getting the customers.
Mm.
And with technology, you can do that. And that's the reason why, if you ask me, is the ability for people to Dheeraj, for people to grow much faster. So this
Yeah.
exponential growth is happening for exactly this reason.
Mm.
What took decades earlier will happen in few years now. What's happening in few years now, after a decade, will happen in few months, and
Yeah.
so on and so forth. Because technology is changing across the world. Regulations are changing across the world.
Yeah.
Today, we could grow only in India because we don't understand regulations in Indonesia or Brazil or Africa, etc., etc. In next decade, you'll see there will be some regulations which will make it very easy for entrepreneurs to go
Yeah.
all over the world, and that's when commerce will be possible globally without
Mm.
investing a lot, without becoming behemoths like Amazon. And
Yeah.
it'll be a level playing field between those behemoths and small entrepreneurs and small startups. And that's when you'll see the scales even happening even faster,
Yeah.
or growth happening even faster. So
Yeah.
so it's just technology and the the infrastructure provided by the governments. I think so. Those
Mm.
two are changing a lot. Where like we've been all listening to our prime ministers forever, right? And in last 7 to 10 years, there's one prime minister who's talking about startups and startups and
Yeah.
startups, right? Yeah, and that's changing, right? That's new
Yeah.
India for you.
Yeah.
So I think the combination of these two is to be credited versus saying that just technology has made this happen.
Mm.
Because without Aadhaar kind of Jandan movement
Yes.
or
Mm.
account aggregator and now OKIN, ONDC
Yeah.
initiatives like this, they keep taking every 2 years, 3 years, will fast track growth for many startups like ourselves.
Yeah.
Um,
And we're already
and
talking about platforms such as UPI being exported to other
yeah,
markets in the
UPI,
world,
right?
right? So, yeah.
Absolutely. Yeah, you go to any small town, and you'll see a QR code available there.
Yeah. Absolutely. Yeah.
Now, the moment we partnered with one of the largest QR providers, we can see access to so many entrepreneurs
Mm.
all over the country.
Yeah.
Just and our ability to create the impact also multiplies significantly, right? Because now we can offer loans in every nook and corner of the country, depending on our ability to take the risk
Yeah.
versus our ability to reach out.
Yeah. Absolutely.
Absolutely.
Right.
Even if banks and NBFCs in the traditional time wanted to take that risk, they were not
Yeah.
able to reach out to the every nook and
Yes.
corner without opening a
Correct.
branch.
Yeah.
Now we can do that, and that's why we will grow. Now I would not, I would not say that FlexiLoans will be the largest, etc., etc. I would say one of the fintechs will become definitely one of the largest lending institution in this country. They will take over some of the largest banks as well in terms of size and growth. Or one of those banks will become the largest fintech. It has to happen. One of the two has to happen.
Yeah.
And next 10 to 15 years will make that happen for you. And we'll all live long life enough to see that in our generation.
Yeah. That's a good segue to my next question. So unicorn and IPO, right? The two big buzzwords for all startups. I mean, uh, are you on that chase? Where are you on that chase?
So, see, I did a lot of IPOs before I came into this, right? So honestly, that's something which does not excite me a lot. Uh,
Yeah.
so for me, it's not that okay, यार IPO कब होगा या आपका valuation, 8,000 crores कब हो जाएगा and so on and so
Yeah.
forth. It's a byproduct of what you're creating. And because I came from that market, of I've seen capital markets so closely. I've seen entities becoming decacons and then being valued, eventually being sold less than a unicorn valuation. So it's about the fundamentals of the business.
Hmm.
I may sound very philosophical when I say this, but
Yeah.
you have to focus upon right fundamentals of product business versus chasing the investors who will give you the top dollar valuation. You should chase the investors which will add the most value for you versus giving you the top dollar valuation. It was reflected in the kind of capital we have. we chose some of the best bankers in the country. People like Sanjay Nair of KKR
Hmm.
back then, and many other large stalwart bankers to back us, and took money from them even when VCs could have valued us much more than what these HNIs valued us, right? Because their risk appetite will be lesser than a VC.
Yeah.
But it was a more patient capital than any of the VC firms.
Yeah.
It was a capital which came in with a lot of advice. It came in with a lot of right pillars for us to focus upon product. A lot of entries into the banking world, to build the best liability franchise in the country, and so on and so forth. So again, choosing the right investors and choosing the right fundamentals should be the focus, and not all of those
Not
are
the.
byproducts. The valuations, the IPOs, they happen, right? As an entrepreneur, the moment you choose to bring, we are all born. At least I'm born in a family where I couldn't fund it few hundreds of crores myself. So the moment you
Yeah.
bring outside capital, you have to do an IPO, or you have to aim for an IPO so that you eventually make your stock tradable
Yeah.
by the investors, so that
Yeah.
they can come in and go out at their will, versus waiting for years for an exit.
Yeah.
Yeah, so IPO has to happen, but it has to be backed by right fundamentals. And for me, IPO should be done by only entrepreneurs when they know that they can predict their, at least, say, next 10 years into 4 quarters or 40 quarters with real confidence. If you
Nice.
cannot do that, don't go for an IPO.
Yeah.
I've done that for a living, before this in my
Yeah.
previous life.
Amazing. Awesome. Awesome. A question on leadership, Deepak. I mean, obviously, it's not easy done for anybody in terms of what you're trying to build. So, talk to us about any leadership situation, crisis that you and your team have gone through, and any learning for those people who are listening to us. I mean, how do you navigate lows? How do you navigate failures? How do you navigate tight situations when you're building something?
Yeah. So in leadership, I'll start with two or three fundamental traits which I focus upon a lot to build in myself. Now, as I said, I was a banker before. We never managed very large teams in my previous role. It was small, very good quality people, but less number of people, and so on and so forth. That's how we grew. One thing which was a fundamental back then for me, and it stayed on when I started FlexiLoans also, was you hire people to whom you can delegate and forget about that job. Yeah. Or who will execute what you're delegating to them better than what you can execute in your limited amount of time. Because as a founder, you will have to divide your you know hours into multiple activities. So as you hire, as you grow, and you bring senior management for each of those verticals, you should say that, okay, I was spending X amount of time on this activity, and if someone to do it 100% of their time, can they execute better than what I was doing in that amount of time? And can they multiply that thing for us? That's how entrepreneurs should think, and that's how I at least think. That can I at least help, or bring better people than what I am in that role to come and join us. I I always say that uh, startup founders like myself should be extremely grateful to people who come and work with them, right? Because they could have always got, and they always had an option to join a large MNC or a large private sector bank or large NBFC, right? They chose to work in a startup, and we should be grateful for that. And I'm extremely grateful for each of those people who took their decision to come and join us and work for us. So that second thing, a startup founder should never forget that till you have become a brand in on yourself, people are doing you a favor to come and work for you. Don't forget that. Be always, extremely grateful to people who are choosing or leaving their career on in your company versus working in a very large organization. Coming to specific situations, again, as a founder, you'll go through phases. In last 6 years, there were times where even an associate will resign, and you'll be like, oh my god, who will do this job for me now? How will this work happen? To now that if somebody is moving on, you're confident that you'll find a better person to do that role for you. So those are all phases. Be at it. I'm not saying don't value the people you have, but don't be worried. You know,
yeah,
Every if somebody moves on as a crisis, you can hire better people.
yeah,
Then you will your stars will be aligned to for you to keep searching and finding right people to come and work with you in your mission. Because see, finally, it's a mission, right? As a startup,
yeah,
all of us have different missions. If somebody is not aligned to the mission which the founders in this firm are driving, they should not be working here. They should be
yeah,
working somewhere else. It's better utilization, their time and our time both. Yeah. Then comes crisis where you brought people with some promises and you couldn't stand on those promises. It can be any reason. Like for example, when COVID happened, and one of my
mm,
a very very good leader in my team, walked up to me saying
mm,
that I'm getting this amazing opportunity in this one area, and
yeah,
I'm thinking next 3 4 years before I start my own entrepreneurial venture. Should I continue here or should I move on? I sat with this person, identified the pros and cons, and eventually came to a point that you should move on because for next 2 years lending will be slow, and this ecosystem can grow much faster. Why don't you go there? You'll be able to learn
mm,
faster because if it's only next 3 to 4 years horizon you are building upon, then you should do that. So I hope I answered the points or questions you had, Dheeraj. If not,
yeah,
tell me more, and I'm happy to double click on some other points.
yeah. So, Deepa, the last question, really, right? I mean, what advice, what suggestions would you give to a lot of people out there in India right now, thinking of whether to jump, not jump? You're listening to contrarian stories, right? Funding is drying up, right? 18 months of winter. What would you say to people out there who are somewhere midway?
So again, I'll jump into fundamentals the way I do it for my life. First take a 50,000 feet view. So India for next decade, take that view. Is there a winter? The answer is absolutely no. Right? This is the time for India and Indians. So if you're not in this country, you're not in the right place. The market is just going through an amazing U curve, and it will continue for 10 years later. If we were to remove this podcast again and share this, I bet you see the chart and it look like a hockey stick. Yeah, for
Yeah,
next 10 years. Uh, Multiple reasons for that, right? As an economy, the governments are doing all the right things, focusing on growth, etc., etc., reducing the ease or improving the ease to do business, etc., significantly. The demographics of our population is so much in our favor for next 2 decades, or next 2 to 3 decades, right? And thus it's an amazing time to do business in this country for next 2 to 3 decades. So next 10 years, as a founder, you have to take a 10 to 15 years view at least, right? So if you're thinking whether should I start something and you're passionate about it, don't worry. The winters may last for a year or more, but if you're creating or starting something which has impact, solving some real problems, you will get the capital. The capital will come your way because the VCs and the private equity funds are also thinking 10 years and they're not thinking 2 years or 1 year. So don't worry, this is all, this winter exists for business models which are not real, where there is growth without revenue, or growth without even promise to revenue coming in future. So for those kind of, I would say honeymoons, which was lasting for some time, will end, and it has to end at some point in time. But that again, if you look at last 2 decades, that has always happened, right? In an upcycle,
yeah,
you'll see a lot of heat building up and a lot of froth building up, etc., etc. But and in a down cycle, you'll see all of that settle. But did good businesses come up in that down cycle as well? Yes, absolutely yes.
yeah,
I started my career back in 2009, and I told you I started this conversation by saying that 2009 was the first test of my grit. Whether I can do that entrepreneurship, because I stayed on to find an investment banking job for 4 months without falling prey to very well paid jobs in corporate strategy, etc., etc. Because I wanted to chase my dream. So as an entrepreneur, you should have that madness in you that okay, I want to chase my dream and I'll stay at it no matter what for X number of years. Make that horizon and then jump for it. Don't do entrepreneurship because you think it's cool. There are much more cooler things out there. You know, you can make a lot of more wealth by working with some very really fast growing startups versus becoming an entrepreneur yourself. You know,
Yeah.
entrepreneurship is more of an impact story for yourself. You know what legacy you leave behind, etc., etc.
Hmm.
For me, it's that. It's not the wealth story, etc. Again, I may sound philosophical, but that's the real answer, guys.
No, amazing.
Uh,
That's a
uh,
fantastic perspective. And it's a very unique perspective, I must say. So
yeah,
yeah, no, thank you so much, Deepak, for this conversation. And we've reached that point in this podcast where we switch the mics. So rather than me asking you questions, you get to ask me a couple of questions before we end the show. So the mic is
perfect.
yours. Yeah,
So to I just answered what I did for
yeah.
budding entrepreneurs who are thinking next 10 years. What do you think? What's your perspective on that? I would, again, you've been leading strategy for such a long period of time, right? So
Yeah.
would love to hear your perspective, not only for early entrepreneurs but also for growth stage companies like ourselves, etc. What do you think? Next
Yeah.
5 years should be.
No, I agree with what you're saying. Right? I mean, I've always been an India file, and I've been in India file for about 20 years, Deepak. Right? And early stage in my career, I used to work for APAC, and I used to work across markets. So I used to be in China very often. I used to be in Indonesia. So I've seen a lot of those markets take off as well, right? And obviously now the China story is down a bit, but at the peak of it, I always used to get asked this question that how do you compare the India story versus the China story? And this is now not now. About a decade earlier, I said that the China story is policy driven, right? And you don't know when that changes. But the India story is people driven, and that can never change, right? So India will grow with government, without government, without policy, right? So I think very bullish on the India story, but I also feel that if you want to make it big, I mean, and I don't want to make a Shantanu Deshpande kind of statement, but I think people do need resilience. This market does need resilience, right? You need to be thick-skinned in very many ways to be able to build success, because resources will be in tight supply, people will be in tight supply. All of that will happen. You have to make it happen despite that. That's the only flag I would raise for anybody wanting to take that job.
Absolutely, completely with you on that. I would, like picking up from what you said earlier, and if if we were to pick your brains on tier two, tier three towns in the country, uh, how should entrepreneurs who are building businesses in tier two, tier three towns or trying to uplift those economies, make them comparable to mainstream or tier one towns of the country, what are the top strategies you would advise to people like us?
Yeah, sure. See, one of the things that I always talk about, Deepak, is that in India you have to play like a leader. So no matter which category you are, no matter where you debut, you could be number six, but your demeanor, your stance will have to be of the leader, because the Indian markets I mean, they only compete for the leaders. And I have this, I mean, story that I tell, and I'm from Bihar, right? And if you're say in Patna or in Muzaffarpur, and you have a broken limb, right? You will go to Dr. Arun Jha, even if you get his appointment 2:30 at night, because you want to go to the number one guy, right?
Yeah,
That's India for you. So no matter where you are, I mean, play like the leader. Don't play a challenger game. That's number one. The second thing is, I think a lot of times we actually undermine the size of hunger that exists in tier two, tier three, right? And the whole story there again is that when we get cousins from UP, Bihar, etc. They say, भैया आप खड़े होने का जगह दिला दो, लेटने का जगह तो हम बना देंगे, right? So I would fan the size of opportunity which is there, and the size of opportunity that people are missing out on by not borrowing resources, by not taking resources, by not taking the help that is so readily available. I would fan that a lot more. I think those are the two top of mind uh, points I would submit for consideration.
super. I like the second point more. It's just amazing. In fact, I'm thinking, should we be with this virtual world coming real, should we be having more remote offices versus one central office in the country?
Yeah. Yeah, why
with the
not?
kind of talent we have, with the kind of
Yeah,
talent we have pan India,
and the hunger,
and the
right?
hunger, yeah, absolutely, the hunger,
Yeah,
absolutely.
yeah.
Yeah. Last point, any guidance to people as they build upon, savings, etc. Given this inflation is happening, how should people go about burn rate, etc., etc. Do you wanna touch upon those points as well?
See, I mean, the jury's out, right? I mean, obviously, unit economics is important, right? And far too long, it's kind of been ignored, right? I mean, in my business, for example, we take a lot of pride in margin, in absolute OI that we generate, right? And that's sheer cash, that's sheer money. I mean, you can use that for hiring better people, for taking people to Goa, giving better increments, and so on and so forth. It's just so much more better to run a very healthy operation because it gives you confidence of doing
Yeah,
things, of making investments that you would not on when you know that your metrics are not healthy, right? So I would say just for the peace of mind, for the leadership, for being able to run. I mean, let's all focus on the health of the business and health of ourselves. I would say that's really the mantra has come out now in a big way. It was shadowed about uh, last 3 4 years, but everybody knew that this is going to play up.
yeah, yeah. No, very, very good point. Very relevant point.
Yeah. Thank you
Perfect.
so
Anything
much.
else you wanna?
Yeah, great conversation. And just the last bit before we let you go, Deepak. I mean, for people who are listening to this conversation, if they want to send you a comment, want to reach out to you, what's the best way? Is there a Twitter handle? Is your email? What's the best way to reach out to you? If you could tell
So
us that.
my LinkedIn handle is the best way to reach out to me.
And
But-
what's that handle if you could want to give out to our people?
So Deepak Jain, cajaindeepak@gmail.com is the email I use there.
Amazing. Thank you so much, Deepak,
Perfect.
for this.